everyone, and welcome to a new ATFX video. This is the weekly market review. I'm gonna share with you the last data. I'm gonna review with you the numbers of the week. We're gonna also check the market and see how the different assets, in which I include equity, commodity, even fixed income. If you want to take a look to the bonds, we can take a look, because actually 2 years and 10 years bond from US has been rising the last 48 hours. And we're gonna take a look also to commodities, gold and oil. Very interesting, the oil, with the last conversations done by OPEC plus, Saudi Arabia hitting that meetings, and also the discussions done with Nigeria and Angola in relation with the cut of production. Today we got finally, well, yesterday evening we got the last numbers. We're gonna review also the gold, Bitcoin, and oil, plus the main indexes has a reference of the equity. Let's take a look and go quickly to the screen. First of all, let's start with facing how the market is closing this week. This is the evening of Friday. By the time you see this video, it's probably the starting of the week. So what I'm doing right now is gonna give you the whole picture of how the week should start and where exactly we are at the end of the week, Friday, 1st of December. So we got the futures rising nicely. Mainly we got Dow Jones, SP 500, and even the NASDAQ 100. All of them are rising. More interesting thing is industries rising above the technology. We usually see NASDAQ rising faster than the industry, which is Dow Jones. And in this case, we got the exactly the opposite situation. We got industry, Dow Jones rising. We also got SP 500 rising more than NASDAQ. And then the last one in that queue is NASDAQ, which is rising 0.33% compared with the 0.75% of Dow Jones. The reason is NASDAQ for many weeks it was the top market rising. Tech companies, it was the ones who were leading the uptrend. And now I think the market is adjusting to those that kind of gap left between NASDAQ and Dow Jones. And it's adapting to the gap mainly because yesterday, even the news commented by OPEC plus in relation with the oil, the cut on production of oil worldwide, it was giving a kind of boost on the energy sector, which is one of the main components on Dow Jones and SP 500, energy companies, ExxonMobil, Chevron, all the companies that produce oil and gas were receiving happily the news. Facing Europe, we also got the DAX rising 1.26%, and we also got Euro stocks rising 0.98%. The reason for these ones is the good news in relation with the last words during this evening on Jerome Powell, who has been mentioned that we are going in the right way. The perception is that there is no need anymore for increase the interest rates. And also, he was mentioned that actually they see the economy is strong again, and even there is a chance that the inflation, the target inflation of 2% in US could reach without, let's say, massive job destruction, which is like without increasing massively the unemployment rate in the United States, which means the expected soft landing has been mentioned and commented for the last few weeks, could be actually a reality now. For the calendar, also checking the numbers, we have seen the industrial production from China. I have been sharing with you, by the way, all of these numbers on our social networks. I got a newsletter. If you want to join my newsletter, just go to my email, gonzalo.canete@atfx.com, and I'm gonna include you in my newsletter, and I'm sending to you every morning freshly a compilation on the top news, macroeconomical news affecting the market every morning freshly. So include this morning. That's why I'm trying to keep all our clients updated, and also friends, colleagues in the industry, financial industry, updated about this last news. And yeah, like I was saying, the last news we have been facing this week, for me, the most important one, the top one, it was the growth rate of the United States. It was 5.2% of growth rate. It was incredible, even higher than the expected. The expected was positive, it was 4.9%, and actually the current number was 5.2% of growth rate, GDP growth rate interannual in United States. Amazing. Even those ones from the Federal Reserve, like Ascaris, have been mentioned not only once, but even a few times already. in the last few weeks, that they are surprised by the results of the US economy. More things, the agreement I was mentioning to you, and I also comment on social networks. Again, I was just sharing with you in the social network that agreement. OPEC Plus announced yesterday that finally they got an agreement with all the countries, which is Angola and Nigeria, the countries that were actually facing a kind of certain discrepancies with Saudi Arabia in terms of how much oil production they will be happy to cut for the next year. But the thing is, the bad side or the bitter test of this agreement is they compromise to reduce 900,000 barrels per day in the oil production worldwide. But the expectations was something around 2 million of barrels per day. So the current number, 900,000, is too low. It's not even half of the market expectation, which it was 2 millions. And that's why the oil market was rising because of finally the agreement was announced, but also dropping a few minutes later, an hour later, just because the details of the agreement was not as they were expecting. And again, during that moment, the effect on the US market was actually good because it was stimulating the energy sector, who has been really weak the last couple of months. It was stimulating the energy sector because of this move. Quotes from Jerome Powell. I have been sharing with you also a few quotes from Jerome Powell on X. So let's take a look, and I'm gonna show you more or less what was the last comments that Jerome Powell has been doing. Particularly, I share with you two comments. One of them was the one I was mentioned in advance at the beginning of the video, which is the comments he has done that finally there is a chance, they believe, that we can actually reduce the inflation to 2%, which is the goal, the target, without sacrifice labor market in US, which means without destroying jobs, which is something that could be described as a soft landing. And it has been many speculations about if the soft landing was true or possible or not. So let me just show to you. If you go to ATFX Connect, you will see all the updates I'm uploading here and freshly sharing with you during the day. Here we go. Fed's Powell. Fed will rise rates again if needed to lower inflation. Again, a new threat on the table. Regardless how good the numbers are in US, we could still increase interest rates if inflation is coming back, which is something they don't discard. I shared with you also on social networks Wednesday night, they published the Beige Book, which is the only public book, which is the reports and collection of all comments from different members of Federal Reserve by states, by districts. So all banks that are part of the Federal Reserve were making a kind of a study and comments and sharing with the public those comments in the Beige Book. Well, that Beige Book was ending the summary of the whole comments all together with one very specific quote. It was saying that they are expecting, let me see if I can actually find for you the quote literally, because I shared on social networks also the quote, and I want to give to you the most clear reference. Here we go. Attention, the public report presented today by 12 banks of Federal Reserve and its summary with these words. Most districts expect price to continue to rise in the coming year, and therefore, there is no guarantee that there is no inflation the next year, and they are actually expecting that the inflation will rise again. One of the details also I shared this week with you, it was the options taken in VIX in a volatility index on SP 500. It was rising. The volume of options on VIX is reflecting fears of an increase in volatility and a possible sudden change in the market. Black sounds, maybe. The VIX options trade in October represent high for the year. You can see also on the chart how the volume on options on VIX are increasing, which means they are getting protected against something. Against what? Well, I can tell you against what. Against 3 weeks of bullish market. As you can see, even there is a gap on the way left by SP 500, which is a kind of very dramatical way to keep buying this market. Take a look just this move. Little bit stops here and continues super strong bullish move here. And my friends, in one way or another, sooner or later, this massive movement needs a correction. When the correction is coming, I can tell you, so far we are facing the 4,600 points on SP 500 as a top, as a resistance. It didn't. They couldn't pass that resistance early this year in summer. So I believe probably it's still pending that resistance there, 4,600. And I got serious doubts that they can actually break out those levels without a proper correction after 3 weeks rising. This is the third week that they close with a massive positive moves on the price. NASDAQ, we got a NASDAQ that is super strong too. It was actually breaking up the 6,000 points yesterday, but now dropping to below the 6,000 points. Take a look also how it's playing with the moving average of 55 periods, and also how the correction, if the correction comes, will probably pulling down to the 15,500 points, which is the 200 moving average period, and also the next support area, which is here, formed during the end of November, and the main support, or more clear area, which is around 15,300 points. So any correction could play on those levels. Remember, this is not advice of any kind. I just here sharing with you my view on the market, but I'm not giving or receiving any kind of reward or payment in exchange of this, because it's not advice. It's not advice in services. I'm just sharing my view on the market and my personal opinion. I don't want to influence your criteria. Take a look on, finally, Russell 200 is breaking out 1,800 points, which was a inverted shoulder, head shoulder in the figure, and it's breaking up this figure, which means like it's potentially representing a very, very powerful bullish move, which could take your price to the levels of, let me check, interesting, 1,975.80 more or less. It's all these areas as a target. So yeah, that makes a lot of sense. So pay attention now, because this figure is going to start to move and it's breaking up super strongly. It was the only market that it was giving to us some kind of contradictory signals, like SP 500 was rising, NASDAQ was rising, but Russell 2000, it was actually dropping or even not moving further than certain levels. Now finally it's breaking out and it's moving according with the rest of the markets. It's a super positive reaction on the market. Let's take a look Europe. We got DAX here, amazing, rising about 16,000 points. It's probably facing now the goals of this movement, which is the 16,450, even 500. You see, that's the top of the runs, price runs here. And probably the maximums that we have seen here was 16,500 is the targets, the goals. But again, my friends, take a look, this massive bullish movement. It's incredible what is going on with this market, because it's 1, 2, and 3 movements. And remember, keep in your mind, European area, European zone is still, or is, under recession. We got bad numbers from France this week. We also got a confirmation from last week from a negative growth rate in the whole euro area. And we also got 3 periods in the case of Germany, German economy, the top economy in Europe, 3 periods, 3 consecutive quarters, either contracting the economy, which is negative growth rate, or even no growth rate at all, 0. So very bad signals. And can we justify this movement, or is actually a trap? And all of those ones who are actually happy and buying back again the European stocks, they're gonna face a really ugly situation soon. We don't know. I'm just suggesting that this doesn't smell so clean or so good if we take in consideration that European market is not in the best moment. Let's take a look also to the dollar, which has been rising since yesterday and especially after Wednesday night, with the growth rate of the United States, 5.2%. It was attracting new investment to US. It was actually reinforced the currency, which is the dollar, because if the economy is growing by 5.2% on the GDP, obviously it's attracting new foreign investors. People recover the confidence and the faith on the dollar, and therefore keep and hold the deposits in dollar. That was the main effect, but it has gone quickly. Why? Probably because of the words from Jerome Powell, who has been giving a really soft speech and suggesting that They are concerned more about the growth of the economy. They're watching closely if the economy is reacting well or not. They're expecting actually a slowdown in the economy. It's all of these comments. They are out there. You can check them. And I will say that the reading between lines of these comments, of this speech, is probably we are concerned about the economy for the first time. We are not obsessed with inflation. And that means like inflation is not anymore a problem, apparently. And we are more concerned about keep jobs and also keep the growth rate in the United States, which is super good because it means for the market, for Wall Street, it means that the money gonna keep flowing, and for the dollar means like more liquidity. It means more dollars in circulation, more dollars, more supply of dollars, less price dropping, which is taking back up euro dollar, as you're gonna see now. It's recovering most of those minimum levels facing here, which it was 108.25 more or less, coming from almost 110.50, which it was the levels, no, 110.05, which it was the levels breaking up during the week. But again, since Wednesday, when we got these numbers of the growth rate in the United States was dropping, again, because the expectation was money movement from even from Europe, boom, to United States, and changing the flow of the money, selling euros, buying dollars to keep your dollars on hold. In regarding with the gold, in relation with the gold, we can see the gold is still rising, $2,066. I believe this effect causing the gold, it was generated, it was getting kind of in a kind of lateral runs during the week because of the good numbers from U.S. economy. We're giving a strength on the dollar, and therefore there is no reason to buy or hold gold if dollar is strong. However, after Jerome Powell's speech, dollar is dropping again. Gold is rising. Plus, summarize on the top of that, we also got Israel and Hamas breaking up the what was the ceasefire that they negotiate, the peace agreement. It was broken since yesterday night. Early this morning, we're starting again the strikes on Gaza, which means like the problem is still on the table, and we still don't know what's the reaction of certain countries. Lebanon, Hezbollah, or Iran against this, because any morning when we wake up, we could see that this war has been escalated or extended, and I think gold is discounted this. Any worse on the situation, it's forcing the gold or is stimulating gold to keep rising. In terms of oil, we got the West Texas. As you can see, dropping. It was rising nicely yesterday, but as soon as we knew the details of the agreement, was dropping again because it's not enough. The cut production announced by OPEC Plus is not enough. Obviously, they were expecting 2 million. They got 900,000 barrels per day of cut agreed for the next year. It's not enough, and it's even less than half of the expectations from the market, and therefore the oil is dropping again. Also, it's dropping because of Jerome Powell is mentioned that the economy is slowing down, and they observe that the economy is slowing down, regardless of the good numbers from the United States. They expect the next year going to actually start to reduce the speed of the economy and so on. If the economy is reducing its speed, US, it's affecting the importations from China, which means like it's affecting the orders, the trade with China. And if China sees this, it's also going to reduce the production. It means in general terms that all production going to start to, in a kind of contagious effect, to start to drop. And it means like the needs for energy and oil from an industry and from China is going to probably drop if that's the expectation. So I think this is what is discounting the words from Jerome Powell. Regardless that, we need to keep an eye on oil because any agreement done by the OPEC could push it back to the top levels again, especially the conflicts in Middle East with Israel and so on. Now, last but not least important, Bitcoin break out the $38,000. We also got a very interesting news, which was the one statement done by one reporter from BBC. Well, I just share with you the link to the website. You can take a look. But the important thing, the comment, it was that they're expecting by between 5th to 10th of January, the SEC, the authority, financial authority in the United States, could approve the first ETF of Bitcoin spot in January. And probably this is one of the news that is stimulating the growth of Bitcoin breaking up the $38,000 per Bitcoin. I think that's all. I have been trying to give you a nice, clean update on the market. Please remember, if you like the content, give me a thumb up, leave me your comment, even send me any suggestions on the comments and so on. And I will see you next week, hopefully, to make another quick review of what happens during the week. Take care. Bye-bye.